Hello, it is Friday the 27th of December. We have survived the Bitcoin options expiration without too much volatility, and now the key question is, are we about to have a Santa rally? Do we have to wait till Monday? Are we going to have one at all? And I've got a few stock requests to look at. So let's start with the S&P, and I'm going to start with a big weekly chart. And if we, so many of these stocks and stock indexes, and particularly tech stuff, is in a very similar pattern. But here, when I count from the low that we made in October 2022, there's a number of ways to count this. I think this is probably a wave 1, a wave 2, and then I'm looking for 1, 2, 3, 4, 5 for this wave 3 to finish, and then a pullback, and then one more push higher for a wave 5, which again can subdivide into 5 waves and last an extremely long time. So when I'm not quite sure, especially when you get to year end, the price action can get very choppy and overlapping, and it's not clear the patterns that we're looking at, and that's what we are looking at here. But whenever I do see what looks like an ending diagonal with overlapping waves where you pull back and bleed into the previous one, it always says to me, if it's at the end, unless it's at the start of a move, ending diagonal wave 5, and at some point this is going to break down from this little channel that we're in, and we're going to see a bigger pullback whenever I look for a bigger pullback. So if this is starting to be a little bit of a toppy pattern, if we don't get it now, I think we get it this at the start of January. And if I measure from these highs and lows, then if we pull back to the most recent previous swing low, 5,730 is where we're looking at. And we could argue within this wave 5 pattern that we're looking at that potentially we have completed 5 waves up, and therefore, we've got another leg lower. But you can always miscount, what you think is 5 waves is actually just wave 1 of a bigger wave 5. So until we actually break down here, I would say that this is not over. But that's what the bigger scenario is. And potentially, here we are at 6,000. That's where I think the bigger pullback comes to. Whenever I'm drawing a ending diagonal, I always actually prefer to make sure it's not just parallel channel. We could argue that this is the little parallel channel here that we are in on the daily. If this breaks down, we head back down to that 5,700 level, and a little bit of a date with the daily 200 moving average. So short term, where are we today, and are we likely to have a Santa rally? When I look at this on a 4-hour chart here, this looks very much to me like we have made a 3-wave pattern higher. I like this particularly because we've got this very clear 3-wave corrective move in the middle for a B leg, potentially a big leg. So this would be 1, 2, 3, 4, 5, and the S&P's favorite retrace level, fib level, is a 786. So if I put these in here like this, let's change the color and put in that 786 fib level. That's kind of where we are. It's a little bit messy in this S&P, but that's where we're reversing. When you reverse at a 786 fib level, the 61 back test of the 61.8 is the confirmation level, which is also pretty interesting. If we extend left here, you can see pretty interesting support and resistance level at 6,043. So that's where our key support is. Underneath this 6,043, we're likely to do a much bigger retrace, 5,975 next, and another 50 points lower. And so that for me is key. But if we break this high, we made an interesting little 4-hour double top pattern here over the holiday. And if we break these highs, obviously we're still going up. We're going to retest the highs, and I think, in this rising wedge, we're not quite done, and we could see another leg higher and easily new highs from here. And I would suggest 6,230. So this double top resistance is key, but the key support for on a pullback for a rally Monday, Tuesday is going to be 6,043. Underneath there, I think we see a much bigger drop and potentially a bigger drop lower in this S&P. We've got exactly the same pattern going on in the Nasdaq. If we look at our weekly, you know, this is starting to look like an ending diagonal, wave 5. It's not over till it's over. But if we look at the sharp drop that we made on Wednesday, the 18th of December, and we measure from this high to low, we again have retraced to the 786. Retrace of this high to low, 22,122, but really this back test of this 61.8 at 21,883 for me is key support. If that breaks, I'm just going to leave that marked on. 21,883, then key support. If that breaks, we're likely to continue lower to this 38.2, and we're actually going to be in a bigger swing. So we're going to be looking at a bigger 1, 2, 3 move here in this. So pretty key support is yesterday's low in the Nasdaq, and underneath there we are looking at potentially another big low, and having done a big up 3-wave in the middle and a big 3-wave bounce, corrective bounce, and another leg lower then for the S&P. So 21,883 for me is pretty key. Because of this ending diagonal, I think at some point it is going to break down, and we are going to start the year or potentially end it in a bigger correction. And when I look at a lot of other indexes, like the DAX has been here. We've been trading today in the DAX and the S&P underneath these hourly moving averages. You know, this is very similar looking kind of 3-wave correction. Do I think we have room to go higher in this one? I definitely do. If I measure from this high to low, we pull back to a 50% level. Normally mean reverting markets tend to keep mean reverting, so I would not be surprised if we get a little bit of a Santa rally on Monday. If we don't continue higher to 50% of this drop, we've already almost filled this gap back to 20,085. At the moment, that round number though, 20,000, there's a little bit of resistance here, isn't it? So above 20,000, I think we continue to 20,085 in this Nasdaq. But for today, we kind of look done. So it's not looking like much of a Santa rally today. Some stocks look better than others. So I've got some requests. The first one that we are going to look at is NVDA. Now this actually, you know, on any chart, and particularly in this NVIDIA stock chart, daily 50 moving averages can be pretty tough support and resistance, and that's certainly true when we look at NVIDIA. When we pull back in November, the daily 50 moving average was support, then it was resistance in December when we were underneath it, and here we are going sideways, testing it again. We could also argue on this daily that from the low that we made on the 17th of December before Christmas, this is a 3-wave measured move. And if we measure from this high to low, remember when you have what you think are big 3-wave measured moves, you put your fibs over both swings, and we're looking at this 50% level here in the middle. So it's quite common to reverse at a 50% level. But if we don't, if we push through it in a wave 4, happy days, then we're going to put the rest of the fib levels on, and we're going to climb level to level to level. So I think that this is a new swing higher. It potentially could be, you know, if we take everything off. So if we continue high, you know, we're looking for 143 and then 147. When you have a big ABC, the most common retrace, if you can get through this tricky 50% level, is a 786. So I would argue if we could continue above 139.8, our next upside target is 147.3. That would mean, therefore, that if we count all the way back to the 5th of August low when pretty much everything made a bottom, this is a wave 1, 2, 3, 4, and we have started the 5th leg higher, which should have a relationship to this first swing. So if we measure from this first swing here, like here, we retest the highs at 151 and then 160. If we make new highs, 167.43 is the next upside target, which is where this wave 1 and this wave 5 would be equal. So, you know, we could also draw this as a bullish flag. One thing I would point out is I think that this is a wave 5 because this has become overlapping. Like normally you would not want to see this wave 4 pull back into your wave 1 high, but in a 5th wave that happens. So when we get up here, you know, it might extend, it very often does, but when we get up here in NVIDIA, so we go 1, 2, 3, 4, 5, the most likely place we pull back to actually is this December low when this is over, and then, you know, we start again. So yes, we could we could also argue that this is a little bullish flag pattern. Here's our flagpole, here's our flag, and we are looking for that, you know, little breakout from this flag here, and that would be us underway. So the problem with drawing it like this, right, is we could still see another leg lower. Like, what happens if we fail here? Well, the bullish fail would be just to pull back 50% or so, and then turn around, make an inverted head and shoulders pattern here, like left shoulder, head, right shoulder, and fly higher. The more bearish argument, sometimes, you know, you think I've said this before, so you think you've drawn an ABC pattern correction and it turns into bigger. So normally, right, it would look like this or something like that. But sometimes they kind of spread out, so it looks like this. So here's your correction in the middle. So you go 1, 2, 3, and that could be what we're seeing here. So we say 1, 2, and we've still got another leg lower to come. And because this is one of those kind of choppy overlapping wave 5s probably, then, you know, that's perfectly permissible in this pattern. You could also, as you know, I like to see it hold within a channel if we are, let's extend this. And so we could also argue that we have not actually tagged the bottom of this channel. So it is, you know, possible that we do see another leg lower here. I'm not ruling it out, but we really are kind of right in the middle on the daily 50% retrace of the drop. It's really kind of a decision level here. It's also the high look from June of this year as well. So it's a pretty key decision level for NVIDIA. I don't know which way next. I still think though that we are in a wave 4. We could still see another leg lower. But if we do, I still think we are owed another push higher before this is over. So this is not any kind of major top call. Yeah, you know, this is a very bullish price action still for NVIDIA. One of the most bullish charts of all has been this Tesla chart. And I would argue that in this one, we haven't actually begun our wave 4, if you like. But if so we've got this wave, haven't we, from the start of 2023. But if we go back to 2024, what we've done this year so far, I would argue that this is our wave 1. The 5th of August low was bottom of wave 2. And since then, we've been looking for 5 waves up. Now, it's a little bit tricky here. I'm not sure that we have completed it, and that we could still be owed a wave 4 sideways here before another leg higher. This is a weekly chart of Tesla. So somebody asked me, where do I think that it will pull back to for a buy? Well, normally, if this is a 1, 2, 3 and we've finished it, then I would say a 38.2 is the most common, which would be back to 370 in Tesla. But if we draw our fibs from this August 5th low when pretty much everything bottomed, we're holding this 236 fib retrace really solidly, hasn't broken. So we could just go sideways here in a wave 4. Sometimes, you know, there's not an ending diagonal. Sometimes you'll see triangle patterns sideways, you know, before you go again. And you can sometimes see very clear, you know, 5 waves in this, and you don't actually pull back that far, and you tend to do kind of more retracing in time. I'm not sure where we are at the moment, but just like a lot of markets, let's go down to the 4 hour. I'm not sure that this correction that we're in is complete. I think we've seen the first swing lower, and this, you know, we've had a bounce, and I think that we could still see another pullback. I don't know whether that's going to end up being a bigger 1, 2, 3 like this, and we come down to this 38.2 or not. For me, it's really this 416 level is key support. I think buying here, because you're closest to where you're wrong, is the best place, because if it doesn't hold and it comes back to 370, then you know pretty quickly, you know that your risk is how much you lose, and so entering where you're closest to where you're wrong, I always think is a pretty good idea if you can do it. Now when we look at what we've done since this kind of funky double bottom here on this 416 level, is it looks like a three-wave correction. So yeah, I'm again, just like a lot of stocks, indexes and so on, if we put our fibs on here, in this one actually we've retraced to 61.8 level, which means this 50% is key support today. It's also the hourly moving averages all bunched up here, and that's key support. But if we look at where we are in the pre-market, here we are down here. So I think that this is our first leg lower. We've had a bounce, and here's our second leg lower, or third wave if you like. So if we take everything else off and we measure from this high to this low, project it from here, we can see that a retest of the lows at 420 is the most likely, and if that breaks we continue lower to 392, and for me again that ideal support level at 370, 371.94, sorry 44. So yeah, the pre-market, we know we're kind of here underneath. We could still pop back up and make a fifth wave up here. Year-end price action, low liquidity can be very tricky. But that's kind of where I'm looking at. But big picture levels, if you're looking for big swing buy levels in TSLA, 416 and 370 are the two that I'm watching. We could just go sideways and not break that. If we take a look at AMD, which has had a really nasty correction, I'm not sure we're quite there yet. Now, this is another one. This is a weekly chart of AMD, and you can see this has been a really, really nice run from the 2023 low, but since the March high this year, you know, we have been in a really, really nasty sideways correction. Unlike Bitcoin, which made a March high and then broke out of the consolidation, this correction has continued in AMD, and I'm not sure, you know, I'm now waiting for this 50% retrace and this weekly 200 moving average at 113 for key support. I measured the moving averages in AMD from the all-time lows in 1975 to the high that we made in March. And when I look at what we're doing here in this kind of bigger correction, sometimes in corrections what you do is you'll finish with 5 legs and it on a kind of ending diagonal lower, and I kind of feel that that is what we're doing here in this one. And I'm not sure if I count from this low, let's go down to the daily, I feel like we're still owed. So here we've got 1, 2, 3, 4, and now we're doing this. I think we're owed one more swing lower in this one, and 113.69 is the level that I am looking at. Now sometimes in these corrections, especially you're looking for the bigger swing, wave 4 swing low, right? And in this one it's a little bit lower, it's around 100 or 93 down here. And so, and normally you'd say after a big 5-wave move that you would expect a retrace back to 50 or 61.8, or sometimes it's somewhere in the middle. So I wouldn't count this 50%. I like this level. However, there is a possibility that we overshoot. So I would say just blind buying at 113.69 without looking for a bottoming pattern might not, you know, unless you're looking for a quick scalp at that bounce level. I'd like to see perhaps a little bit of some decent price action there before I think I went all in. But 113.69 first level, and potentially we extend lower towards 100 in this one. Okay, let's take a look at MicroStrategy, because MicroStrategy I think has been bouncing for me at a really decent level. This 324 zone was kind of the first ideal buy, not for a number of reasons. The daily 50, this previous swing low, it's 50% of the whole swing since the August 5th low. But as you know, sometimes I like to see also a three-wave equal measured move. So this 310, kind of 320 level in MicroStrategy and this daily 50 is really important support in terms of measured move. Actually, if I go from this high, it's actually 318.67. Really, really important support. If it doesn't hold, then we are likely to continue lower to 240. So now a lot of this I think is going to be based on what happens in the Bitcoin price. So we'll look at that next. At the moment, in terms of where we are, we're trading sideways. We've been trading sideways for 5-6 days in between these daily moving averages. So pretty important support. A close underneath this level, 322, or holding underneath it, could see a pretty nasty bigger pullback all the way to 240 in MicroStrategy. The first time we closed back above this 20 moving average though, and you can see for this whole trend, this 20 moving average was key support. It was key support when we pulled back to it in November and early December, a close above it, and at the moment that is at 364, a close above 364, and I would say this correction is over and we're in a bigger move higher. At the moment it all just looks pretty nasty, gritty sideways into year end in MicroStrategy for now. So let's take a look at Bitcoin. Let's pull this chart down and see where we are. And again, from the August 5th low, we are sitting on pretty key 236 support sideways in the daily. We're supported by the daily 50 moving average, and the key level that we're looking at is 94. If we lose 94, in Bitcoin, we are most likely to drop down to between 86 and 85. I think the big 236 fib level for me is 86,500, but Bitcoin very often overshoots, so I wouldn't be surprised to see 85,700. This is our next key support zone. Like a lot of the tech charts that I looked at, this kind of suggests to me a very nasty, choppy, overlapping, ending diagonal wave 5. So back to this bottom of this wave 4, maybe a bigger one is what we're doing at the moment. We're holding this support just fine, nothing to worry about, but really hasn't kind of reset, or we're going sideways in between these moving averages. We've got this really interesting high that every time we come back to it, we can't get above it. And that, of course, is no prizes, big round number 100,000. So, basically, since the middle of December, we have not been able to break above 100,000 and hold above it. So that becomes the key resistance, and 94,300 becomes key support. Are we going to just go sideways in the sideways range until year end and see which way we break out? Quite possibly. I have to say that I'm thinking that we see this bigger leg lower, and the reason is I think that potentially this is a first leg of our correction. This is an ABC, and if this breaks down, this is where we're likely to come back to and where I'll be lining up to buy. So that's how I see where we are in Bitcoin. I'll do more altcoins separately. I hope that's useful. Let me know if there's anything